Hey folks, see Rachana Ranade here and I welcome you all to a very important and a super educational video which is about JSW Infrastructure Limited IPO. Now why did I say super educational? Reason is very simple. This company is mainly into the operation and management of ports, and till date I have not covered any port related company in detail on our channel, and that is the reason why I'm sure you will get to know about a lot of concepts in this video, so keep on watching the video till the end. But when I use the phrase operation and management of ports, I'm sure you might be like, okay, something related to ports, but exactly what does the company do and from what services do they earn the revenue? For that, we have to understand that the company offers four major services, and which are those we are going to understand one by one. So, very first one is known as marine services, including the piloting of vessel using tugs, mooring, berthing, and deberthing. I'm sure this might be like very crazy to understand, but with the help of graphics, in simple words, I hope you understood that this company will help the ships to park. Okay, now for parking you will need something like tugs, moor, so something like a rope which through which it will be tied on properly to the port, so that it does not shake and it is stable at the port. Number one, that is the first service that they offer. Second service that they offer is stevedoring services, including loading and unloading cargo to and from the berthed vessels. So here you can very clearly see that what does it mean. Basically, whenever the ship is now parked, now the whatever material it is carrying, the cargo that it is carrying, that has to be offloaded. Or possibility number two, if it is on, it's going to go for some tour, then the cargo will have to be loaded onto the ship. So this loading, unloading, these services are offered by this company, right? Now the third one is blender intra-carting services, including transportation of cargo using conveyors, railways, roads. So now what do I mean by this? Let's visualize. Okay, ship is at the port. Now they have unloaded. So basically a crane has come, it has picked up the cargo, it has picked up the material. And where will it be put? It will be put on a conveyor belt. But from the conveyor belt, where will it go? It will have to be transported to the ultimate destination through what? It can be transported through a roadway, or it can be transported through a railway, or it can be transported by air or control. मार्सवर नाही गेलो अजून आपण हां. सो पॉसिबिलिटी नंबर 4 that I wanted to say is that if it is in a liquid form, it could be transported through something like pipelines. Okay, so transportation also done. But last service that they offer is storage and handling service. Now what do I mean by that? There is a possibility that yes, cargo or the material is now at the port, but they don't want to immediately transport it, they want to store it at the port. So there could be 2-3 possibilities here. If it's like a dry cargo, a dry material, it can be stored in a warehouse. If it is like in a liquid form, it could be stored in something like containers. Even for a gaseous form also, it can be stored in containers. I hope with the help of this you understood a lot of concepts around what kind of services does this company provide. Well, now that you have understood about what are the different services that the company offers, now let's get into a little bit details about which are the ports through which the company operates, and also some amazing additional knowledge bites that you're going to understand through this. So for that, have a look at this chart. Now if you see here, company majorly operates through ports like Jaigarh Port, Dharamtar Port, Paradeep Iron Ore Terminal, Paradeep Coal Exports Terminal, all this. Acha, many in India, one or two outside India as well. Now if you see here, you will understand that the port type, there are two major types. One you can see, two major types, one non-major and one major. Wow. Okay. So now if you see here, what do we mean by non-major? Prima facie, non-major might be something like small and major might be something like big, is what is a normal parlance, is a normal understanding. Now let's see how much is the annual installed capacity. For the non-major ports in Maharashtra, you can see annual installed capacity, which is 55 million tons per annum, 34 million tons per annum, and all the major ports have capacities of 10, 34, 6, 8, 2. क्या बात है? And you might be like, asa kasa kai? Wait. Few more points coming up. Now, if I were to check the overall, now annual capacity is done, but if you were to check overall berth length as well. So overall, total berth length you can see in meters. For Maharashtra ports, it is 2,319, 771, and here it is what, 370, 350, 315, 348, 270, very small. Even number of berths is basically how many, simplified format again, number of berths is how many parking slots does each port have. Maharashtra ports, Jaigarh and Dharamtar have 7 parking lots, berths basically. Dharamtar 5, and Baki 1, 2, 1, 2, 1, 2. Now, you might be like, how is this happening? So now for that, let's get to a very simpler explanation for this. Okay. Now, forget about ship parking lots. Normal parking lots is what you can visualize. Okay. Now, assume that there is a big apartment, and this big apartment has like huge number of parking lots, right? And that is why we call it as a major parking lot or a major port type, the one which we were discussing. Now, out of this, I have the authority to operate, manage only one or two. Okay, so you may say only one or two, and still you are calling it as a major. Wait, why major? Because the total lots are a lot more. Okay, so this is, you can imagine something like this. It's a big apartment. Out of that, I own only one or two parking lots. Okay. Number two, now you can see this is a non-major port. Okay, now in non-major, parking lots, total parking lots available are only 5. So this is like a bungalow parking. I have only 5 slots. In totality, the number of slots itself are 5. But I have the authority to operate and manage all 5. Okay, so now here, even if it is 5, we are saying non-major, because I hope you're understanding. It's like a comparison between a bungalow parking, which total slots are 5. I own and I operate, manage all 5. But in an apartment parking, non-major, out of 100, I have only authority for 1 or 2. Well, now that you have understood a lot of terms till now, let's go a little bit deep into the company and try and understand from where does the company generate revenue. We'll try and understand a lot of angles for that, not only revenue, but how much of what category do they handle and whatnot. And for that, have a look at this chart. Now, if you see here, this is about breakup of cargoes handled. Now, if you see here 20 financial year 21, 22, 23, let's focus on what has happened over the last 3 years. So you can see something other than thermal coal. Now, you might be like, what comes in other than thermal coal? It could be something like coking coal. It could be something like steam coal. Okay. So this ratio, this percentage was almost plus 40%. So 42%, 44%. Now this has drastically dropped down to 25%. This is more or less similar, which is the iron ore thing. But once I can say that other than thermal coal has dropped drastically, what has increased? Thermal coal has increased from 8% to roughly 29%. Now, reasons for that and whatnot, we are going to understand in the coming sections of the video. As of now, you can just understand that yes, there is some sort of, reshuffling happening in what sort of cargoes do they handle. Now, if I were to understand, okay, understood the type of cargoes they handle, but where? For that, here, whatever we are seeing right now, this is about the coast-wise cargo handled. You can see here, West Coast accounts for a majority of the chunk, almost 70+%, and balance just 25%, whatever is handled in the East Coast. Now, this is also shifting here. If you can see in 23, it has done a mix of almost 65% and 35%. So, two things understood till now. First, we talked about the breakup of cargoes handled. So, what is being handled? Here, from where is it being handled? Now, let's understand about the volume-wise breakup and the value-wise breakup. Okay, out of the total cargo handled, the cargo relating to JSW group customers, these are called as related parties. Here you can see fiscal year 23, 66.63% was only related to JSW customers, group customers. These are related parties. So can I say it's a pretty big chunk? Yes, out of total, let us say out of 100, 66.63 is only related to JSW group companies. But this is volume of cargo. What about value of cargo handled? You can see again financial year fiscal 23. Even though volume wise is 66%, value wise it is around 51.88%. Okay, all understood. Now, final thing, let's go on to how much is handled by which port. So, this is kind of extension of this one. Here we talked only about West Coast, East Coast. Now, let's go into coast wise, port wise details. You can see here Jaigarh port is accounting for a major chunk, which is almost 40% plus, be it 21, 22, 23. Second highest being Dharamtar port, and balance are the other ports. Now let's quickly go through the promoter related information about the company. He is Mr. Sajjan Jindal and is currently the chairman and non-executive director of the company. He holds a bachelor's degree in mechanical engineering and has done this degree from Bangalore University. He has been associated with JSW Steel as its managing director since 1997 and currently is the chairperson and managing director of JSW Steel Ltd. Now, while I was going through the promoter information, I found some amazing trivia, some amazing fun fact. As per one of the Forbes article, his mother, Savitri Deviji Jindal, is richest woman of India and her wealth is 23.7 billion US dollars and approximately. And if I were to translate that into rupee terms, that approximately comes out to 2 lakh crore rupees. Now let's understand about some key points about the industry, and for that have a look at this chart. Now, if you see here, overall traffic at Indian ports from financial year 19 to around 23, the CAGR was around 2.8%, but the expected CAGR from financial year 24 to 28 is at 3 to 6%. Obviously, no need to tell you, but entire statistics or statistical data has been taken up from RHP. Okay, this is about the overall traffic, but what about the capacity? What about the capacity utilization? And for that, let's go to the next chart. The capacity utilization for major ports is around 47% right now. This is going to be super important stat, and the understanding of this is going to come in the subsequent sections of the video. So just keep this figure in mind. Current capacity utilization at major ports is 47%, and this same thing for the non-major ports is around 60%. Okay, keep this in mind again. Okay, this is understood, agreed. But is government taking certain initiatives? We understood that overall increase is expected at 3 to 6%. The traffic, okay, is government also taking up certain initiatives to increase the traffic, to increase overall capacity utilization and whatnot? So for that, they have come up with Project Sagarmala, or the Sagarmala program. This has more than 800 projects. Estimated cost is around 5.48 lakh crores, and this is going to be implemented during 2015 to 2035. So it's a huge long-term project. As on date, whatever is given as per the RHP, again, latest update, this is as at 31st March 23, 21% projects are completed and 79% worth projects are still under implementation or under development. But when I say Sagar Mala program, what all does it include? It includes something like port modernization, port connectivity enhancement, port-led industrialization, coastal community development, and coastal shipping and IWT. So all in all, it's going to be a very ambitious project, and the project completion, as I mentioned, it's not like within a year or two, it's a very long-term project. Now let's understand the financials of the company. Again, I'm going to show you a screenshot or a snapshot of whatever is there in the RHP, and for that, have a look at this. Now, if you see overall revenue from operations, it has been going up. All rupees are in millions. So, like I always say, millions to crores can be converted by just shifting one decimal. So, something like 16,035 millions is nothing but 1,603.5 crores. Okay, so their revenue from operations has gone up from 16,000 millions to 22,000 to 31,000 millions. So basically, revenue is an increasing trend. Now, if you have a look at the EBITDA margins, then EBITDA margin overall is more or less stagnant at around 50 plus percent, 53%, 51%, 53% again. Now, if you have a look at the net margin, it has been a little bit wobbly from 16.96% down to 13.89% to 22.22%. Now, if you have a look at the next two parameters, which is ROE and ROCE, here you can see that ROE, which was around 9%, has gone up to almost 18%, whereas ROCE, which was around 8%, has gone up to 19%. So both almost have doubled in the last 3 years. All these points that I mentioned were about financial parameters. Now, if I talk about 2 or 3 non-financial parameters, now if you see here, installed capacity, that has shot up from 119 million tons per annum to 158 million tons per annum. Even capacity utilization has gone up from 35% to 56%, and total cargo handled, the volume has also gone up from 45.55 million tons, metric million tons, I should say, to 92.83. So again, MMT, metric million tons. So this is also a pretty much big jump in the non-financial metrics as well. So let's move on about the risks of the company, which is mentioned in the RHP. But again, I'm sure that you will get to learn a lot of newer concepts as well while we discuss these risks. It was in 2021 that the company failed to meet the specific debt to equity ratio under the facility agreement with IndusInd Bank, and the same was condoned through a specific credit approval by the lender in December 21. Now, what do we mean by this? Typically, when a banker, in this case, let us say IndusInd Bank Limited, they gave a loan to this company. Typically, there are certain terms and conditions which are mentioned in the loan agreement. And here, let us say the bank says that you have to maintain this debt to equity ratio. Now, if the company fails to actually comply with the debt to equity ratio requirement, there could be multiple possibilities. Just one or two examples. Possibility number one, the bank may say that we are now going to increase your interest rates, okay, after a specific period. Possibility number two, the bank may say, okay, enough, repay the loan, okay. But nothing of that sort was done, because it is mentioned the same was condoned through a specific credit approval by the lender. Condoned means what? Chalo, theek hai, okay. Agreed. No problem. That is the meaning of that. Okay. Second point again now is pretty interesting. So to understand this point, you can imagine which are the parties involved. One is Konkan Railway Corporation Limited. The other party is JDRL. Now, what is JDRL? It's a subsidiary. It's a step-down subsidiary of JSW Infrastructure Limited. Are you able to visualize? JSW Infra is the main company. Uska subsidiary is JDRL, and this JDRL had, let's say, entered into a contract with Konkan Railway Corporation Limited. Now, typically what happens is that whenever a company is doing a contract for another company, Konkan Railway may say, what if you don't complete the specific project within time frame? What if you don't comply with the terms and conditions? And so that this company, in our example JDRL, can give an assurance that okay, we'll do it, don't worry, and if you don't, then we will pay the price for it. Typically, in such situations, something known as a bank guarantee gets involved. In our example, JDRL had given a bank guarantee in the favor of Konkan Railway Corporation Limited, that if you don't comply with the terms and conditions, Konkan Railway can take away this amount from JDRL. Okay. Now, what was mentioned in the RHP? What is mentioned in the RHP is that in 2019, Konkan Railway Corporation Limited invoked the bank guarantee. Invoke means they took away this amount. How much? 232.59 millions issued by JDRL, which was a subsidiary of JSW Infra. Why? For failing to comply with the terms of the concession agreement. So this amount was forfeited. But then on August 8th, last month, 2023, Konkan Railway Corporation Limited found that it was unintentional and it was due to reasons beyond the control of JDRL. This entire amount of 232.59 million was refunded back to JDRL. Again, everything is mentioned in the RHP of the document, but through this, at least we got to know about the concept of bank guarantee, how the bank guarantee can be invoked, and if the organization feels that okay, it was beyond the reasons, it can also be refunded. In our case, the refund, whatever we are discussing, refund happened just in the last month. Moving ahead to the third risk mentioned in the RHP, whatever discussion we did, that how much was the split of the cargo handled. If you remember, iron ore, thermal coal, other than thermal coal, that was contributing to a big chunk. All these three put together were contributing to more than 70% of the total cargo handled. Now, what is the risk? Risk is that if overall, not only India, entire globe goes green, we focus more and more on renewable energy sources rather than such energy sources, overall demand for such products will only decrease, the overall cargo handled will decrease, and that may lead to an impact on the financials of the company. Last point, risks mentioned again in the RHP, legal proceedings. Now, if you see here, against the directors of the company, pretty big amount against all four you can see here. And if I were to just take a total of these amounts, this total contingent liability comes to around 817.74 crore rupees. Now, many viewers ask me that how do we actually check 817 crore is a big number or is a small number? For that, typically you can compare it with something. Just as an example, if you were to compare it with the net worth of this company, it is coming approximately to 19%. And moving ahead with the last risk is about the pledged shares. Now, if you are having a look at this chart, you can see that JSW Jaigarh Port Limited 100% pledged shares, JSW Dharamtar Port Private Limited 100% pledged shares, and for balance 3 only 74%. Okay, it's not only obviously, but I feel again everything is mentioned in the RHP. Whenever you are taking your own decision, whenever you are doing your own analysis, these things have to be considered in analysis. I'm just trying to summarize this huge document for you so that you know which points can be focused upon. After all these risks, let's move on to the strengths of the company as well. It's the fastest growing port related infrastructure company, it's the second largest commercial port operator in India, and also strategically located assets at close proximity to JSW Group customers. So all these are the strengths about the company. Now, if I were to do a peer comparison, again, it's a huge one. As per the RHP, they have compared themselves with Adani Ports and SEZ Limited. I'm going to give you as homework, there are total 21 parameters based on which they have compared themselves with Adani Ports and SEZ. You have to tell me as to in how many parameters is JSW Infrastructure Limited winning as compared to Adani Ports. But for that, have a look at this chart. Look at it nicely, aram se, take a screenshot, and after you're done taking the screenshot, you'll have to do the homework, you'll have to give your answers in the comment section below. Now let's move on to the valuation metrics, and for that if you see here, Adani Ports and SEZ PE is at 35.95, but for JSW Infrastructure, if you check at the upper band or the higher band, their PE comes to around 28.88. And finally, let's move on with the IPO details about the company. One interesting fact is again coming up here. The first objective is prepayment or repayment of outstanding borrowings. Okay, fair enough. Second one is financing capital expenditure requirements, CapEx, for various ports, like you can see here on screen. But now, if you remember, when I was talking about the capacity utilization points for major ports and non-major ports, the exact percentages, whatever, but they were somewhere around 49% and 60%. Now you can imagine, they are only at barely 49%, 60%, still they want to do capex right away. Why? Now, if you have seen a lot of my videos, there are certain types of companies, let's say something like a specialty chemical company or other company, when they are at a capacity utilization of 85-90%, that is when they start thinking about capex. Why are they thinking about capex at around 50-60% capacity utilization? For that, please understand, capital expenditure for buying or setting up a machinery, how much time will that take versus capital expenditure for an entire port, to develop that, to set up those cranes and whatnot, that is going to take a comparatively longer time frame. And that is the reason why, even if they are currently only at 49 and 60% capacity utilization, still a need is felt for additional capex. So I hope this point is also clear. Third point is general corporate purposes. Anyways, now let's move on with the IPO details. Here you can see IPO date 25th September to 27th September. Price band 113 to 119. Fresh issue है पूरा का पूरा 100% fresh issue 2,800 crores, and whatever lot size, minimum maximum application is what also you can see on the screen. Well, I hope you understood and you enjoyed this video. You understood a lot of details about this company. Again, as usual, the whole thought process is to sum up a huge prospectus, 400 plus pages prospectus. Typically, that's what happens into roughly around a 15 minutes video, so that you can do your own analysis and then take your decision. I hope you enjoyed this one. Till then, take care. Jai Hind and bye bye.